Welcome back. A warning from top leaders in corporate America. JPMorgan Chairman and CEO Jamie Dimon and Berkshire Hathaway Chairman Warren Buffett writing an op-ed in the Wall Street Journal with the headline, "Short-termism is harming the economy." In it, they argue for companies to reduce or eliminate providing quarterly earnings guidance. Joining us now to talk more about that is Hilton Capital Management Chief Strategist, Bank Analyst Dick Bove. Dick, good to see you. Thanks so much for joining us.
Thank you, Maria.
What do you think? I mean, obviously, the short-termism with the quarterly guidance and what's going to happen in the next 3 months does create a lot of trading in the stocks. Are you for this? Less information?
Well, yes. No, I think this information is critical and it should be revealed. But I don't think we're dealing with short-termism when we took a look at banks at the current time. In other words, if you wanted to pick one industry that has benefited most by what President Trump has done, it's hard. You're going to be hard put to find something better than mid-cap banks. You know, we're talking about loans in the United States growing 3 to 4%. If you look at the mid-cap banks, loans are growing at 12 to 15%. We're talking about 6 to 8% growth in the big bank earnings. If we're looking at the mid-cap banks, we're talking about, growth somewhere which is 2 to 2.5 times that amount. And if we're looking at trying to make money in stocks, okay, which I think is what we're all about, there are 40 mid-cap banks which are up over 20% this year. There are, something like 80 that are up over 15% and 150 that are up over 10%.
Right.
So, all of the things that the president has done, and what the regulators are doing has been a bonanza for these mid-cap banks, and these stocks are flying.
Right. The rollback in regulations has been very positive and impactful. But just to be clear, would you favor these companies giving up reporting quarterly guidance, which is what we led into the segment with, as JPMorgan CEO and Berkshire's chairman are writing in the op-ed in the Journal today?
No, not at all.
You don't like it? You don't like the idea?
Well, these companies have an obligation to tell the owners what's going on
every
in the
3
company.
months, yeah.
Yes, and even, in shorter periods through conferences and other methods of communicating with their stockholders. They don't own the company. The stockholders own the company.
Right.
And the stockholders are entitled to information.
All right, so
and for them to say they don't want to give it, it's not right.
And you want to hear that every 3 months because, James, the issue, of course, is whether or not it creates short-termism. But go ahead. You had another question.
Yeah, I'm just wondering about, you mentioned life is better for mid-caps now, some regulatory relief coming from the administration. Does this mean some of these mega banks really ought to be shrinking, ought to be breaking themselves up, getting into that less regulated zone?
Well, the fact of the matter is that they are not competing effectively with the mid-cap banks. And it isn't the easing in regulation that I'm talking about. What I'm talking about is the president has created an environment in which small companies and medium-sized companies are now borrowing money. And they're borrowing money from these mid-cap banks. When you talk about 12 to 15% in loan growth, that's where the strength is coming from. That's why the earnings are going up, and that's why the stock prices are going up. That's not short-termism. That's not easing in regulation. That's strength coming up, bubbling up from the bottom of the economy, which is, if you will, pushing these banks up. Remember, this is a totally domestic industry.
Right.
These companies get all their funding from Americans. They give all their money in loans to Americans. They don't have to worry about tariffs. They don't have to worry about a whole bunch of these, Italian banks or what's going on in Venezuela. All they have to look at is what's going on in the United States, and what's going on in the United States is just terrific.
Yeah, it's a good story right now, Mike Murphy.
Hey, Dick, it's Mike Murphy. So the large cap banks haven't moved anywhere near as much as the mid cap banks have, but it seems like now that regulations are helping the large caps also, you might start to see some M&A activity. Are there any names in the mid cap level that you think are ripe for the pickings from the JPMorgans of the world?
Well, JPMorgan will not be allowed to make acquisitions. In other words, we have not yet figured out that we do need big banks. When we talk about sanctions of this country and sanctions of that country, we're talking about the banking industry globally, right? And to shrink the banking industry in the United States and attempt to then put sanctions on Iran or North Korea or whomever is just crazy. Mm-hmm. We need very big banks. But if you want to make the most money investing in banks, you got to go where the loan growth is the fastest, and that is not the big banks. That is the mid-sized banks that are dealing with, the U.S. economy at the middle level.
Right.
And that's where you're making your money.
Well, just to be clear, Mike was asking about acquisitions and whether or not we're going to see deals for the mid-cap sector and whether or not the larger banks are the acquirers. You're saying they're at their limit. They're not going to be able to acquire much more the larger banks. But do you expect M&A in the mid-cap sector? Real quick, Dick.
Yeah, it's going to be explosive. There's going to be more acquisitions in the next 12 months in the mid-cap banks than you've seen over the last 2 years.
There you go. There's the answer to your question. Dick, good to see you, sir. Thanks so much.
Thank you.
Dick Bove joining us there.